Thank you, Taylor. Adeline Hinderer is Deputy Head of Trade and Agriculture for the European Union Delegation in Washington, D.C. Since joining the delegation in 2011, she has worked on a range of transatlantic trade and investment issues and follows related issues related to American and European trade with Asia. Currently, she plays a key role in the launch of negotiations for a transatlantic trade and investment partnership, something you'll be hearing much more about in the coming days, weeks, and months. She also coordinates closely with EU member state trade representatives and manages the delegation's outreach on trade-related issues. Her career with the European Union began at the European Commission in Brussels in 2005, where she specialized in bilateral and multilateral negotiations on services and investments. Subsequently, she worked in the team handling trade relations between the EU and China. Before joining the European Commission, Hinderer worked for a federation of multinational companies as an advisor on social, environmental, and sustainability issues. She received an MA in European Affairs from the College of Europe in Bruges, graduated from the Institut d'études politiques in Strasbourg, and studied international relations at Georgetown University. She's a French national, married to an American, and they are the parent of one son, as I mentioned. I should mention today's lecture is sponsored in part by the European Union Delegation to the United States. We're very appreciative of their work to bring Ms. Hinderer to Utah. Please join me in welcoming Adeline Hinderer.
Good morning. Very glad to be with you to celebrate Europe Day with you all. So I was asked to talk a little bit more about two things, what we are doing on the trade side, but also obviously the economic situation in Europe. You've all read the newspaper. We've had much more attention to the European Union than we've had in the past, partly because of the economic situation, the crisis. So I'll try to capture a little bit where we are and what we've done. Okay. That's a slide that standard slide that we have. I think most of you know very well all that. I'll just mention one thing that some people have not realized. We have 27 member states right now. As of 1st of July this year, we will go to 28 member states. So Croatia is joining us. So the EU, all of those who know, the EU has been expanding quite dramatically, and we are still a growing club. I'll mention maybe just the 23 official languages. So in practice, the way we work when an EU regulation, law, consultation is done at European level, we do translate in all the official languages to make sure that any citizen is able to read it in his own language and can understand it. And it's a pretty complicated system. It means we spend something like 350 million every year just to translate some of the documents. But obviously, we want to make sure that any citizen can have access to the information in its own language. The rest is pretty self-explanatory. So where we are, I think we're coming a long way in Europe. Those of you who have followed a little bit situation will remember maybe some of the newspaper articles speculating about a breakup of the euro, a lot of, I would say, interrogations, a lot of fears. I think where we in terms of economy, we are still in a mild recession. We've been in a mild recession in 2012. We expect that to continue. GDP flat 0.1% and contracting a little bit in the Eurozone area. But we're talking about a gradual recovery and hopefully growth back on track in 2014. Obviously, those are figures for the EU. You would see very large differences between the member states. Obviously, those hardest hit by the crisis are still struggling, while a lot of other economies are doing much better. So that's an average, if you want. Looking a little bit at business conditions, the economic sentiment, the business conditions indicator when you talk to purchasing managers. Again, we're starting from very low levels from where we were, but it's pointing upwards. So we think the worst is hopefully behind us in terms of where we are. And same in terms of government debt, a lot of reforms have been undertaken in a lot of economies to bring spending in line with revenues. So quite drastic structural reforms, stringent measures, and we think the debt is gradually stabilizing. This was necessary if you want to restore investor confidence. I mean, those reforms were demanded by the market. But at this stage, we are also very mindful that all those reforms should not prevent growth. So the current focus, and certainly from the Commission side, is also to bring together measures that will also have an impact on growth and jobs. So at this stage, one of our main focus is on employment. We're still at levels that we find are unacceptably high. Overall, for the European Union, we're talking about 11%, 12% in the Eurozone areas, but you have very wide differences. Some of you may have heard about 27% unemployment in Greece, even higher if you look at youth unemployment, same for Spain. And then obviously we have countries like Austria where you have a 4.9% unemployment rate, which is very good for the EU. So clearly youth unemployment are priorities at this stage, and that's where both at national level and at European level we're trying to find measures that will help in terms of training and different things. So that's clearly a priority. And this is actually quite complicated to explain, but I'll try to go through it. For the past 3 years, we've been really undertaking a lot of very substantial reforms in the European area. So let me start a little bit, but what we've put in place to answer the crisis. So on the left side, when we talk about programs, we're talking about obviously Greece, Portugal, Spain, Ireland, and now also Cyprus, that have been helped financially in exchange for agreeing to undertake some measures and to with different conditions attached to the loans. So that's, if you want, the first measures that were put in place to help those countries. When we talk about firewall, we've actually established a permanent mechanism that is in place since last year that enables any countries that have difficulties to finance themselves on the market to obtain access via different tools. So we have a way to help countries that basically need urgent financing, and that's a way also to avoid that difficulties in one market may bring contagion to other markets. When we talk about governance and rules, we've been putting in place really a substantial set of measures. I mean, which means that we had to have 27 member states agree on different rules. It gets a bit technical, but let me try to explain a little bit. Basically, it's about greater coordination. So when member states pass a budget, they will now have different conditions to meet and penalties if they're unable to meet those conditions. And it's about informing each other more, so really created more governance in our system. We have really different names for that. Sometimes we've called six-pack reform, which is something we're trying to pass now. Two-packs reform, those are names for really a list of reforms where to make sure that the way we work on national budgets are more coordinated and more in line with different criteria. Another very important thing which you will probably hear about or read about is the question of a banking union, so a single banking union, which we're working on right now. This includes different elements. It's about, first of all, resolution, so ensuring that at European level we are able to actually redress a bank or actually decide to close it, but at European level when we realize that there is an issue. So that's one part that we're discussing about, to make sure that at European level we're able to do that. The other question is supervision of banks. We have more than 6,000 banks in the EU, And what we're discussing right now is a package to make sure that we can have supervision at European level. So those systemically important banks, the ones that have a systemic risks, would actually no longer be supervised at national level, but at European level. And this is, when you think about European integration, it is a question of sovereignty. It is bringing powers from national level to the ECB and to other structures. So it is complicated to agree. But the crisis has revealed that we need more integration at European level. So that's one big project that we're working on, which you will hear under the name Banking Union. And then the other parts of this banking union is the guarantee of deposits. So making sure that across the EU, in all member states, any deposit in a bank up to 100,000 euros would be guaranteed. And so that's part of the package, really making sure we have all those rules in place at European level and a supervision at European level. And then growth is the other part that I already mentioned. All that you have to realize, those are pretty extensive measures. Nobody would have thought we could do that at European level maybe 3 or 4 years ago. But because of the crisis, very quickly we've put those packages together and member states are working on bringing all those rules. The EU is working more slowly because we have to get an agreement amongst each other. But because of the crisis, we've put a lot of reforms in place. And I'll finish with a few words about Cyprus, because obviously that's been the focus about in the past few months. I would say the Cyprus situation, obviously Cyprus adopted the euro in 2008, so just at the time the crisis started. They have really an oversized, if you want, banking system compared to the economy. I mean, one of their development model had been to attract funds and to promote very favorable conditions for investors. Obviously, they were very hardly hit by the Greek crisis. They owned, their banks own a very large chunk of the Greek debt. So all those things combined together meant that very quickly the situation became unsustainable. The government had to bail out one of their main banks, the Laiki Bank, and as a result, they couldn't face their obligations. So it was very complicated, but in the end the Troika came together and it was possible to agree on a financial package. Some of the difficulties you may have seen is that the first proposal by the Cypriot government was actually requiring all lenders to pay a certain percentage of a tax. So you would have a deposit and you would be taxed on your deposit, which obviously created a lot of resentment and was not in line with the proposed 100,000 euros deposit guarantee, if you want. So as a result, it was possible to adopt a substantial package afterwards that would actually not tax deposits below 100,000 euros. And that's the package that people are implementing right now, with commitments to reform the sector, downsizing of the financial sector, and hopefully that will be sufficient to bring back stability in the Cypriot economy. So I think I'll stop here on economic crisis, banking reforms, and if you have questions afterwards, we could go into that. We could actually, I could take a few questions on that part of the presentation if there's any burning question right now. If not, I'll continue on trade, but I'm very happy to take any question or anything that's not clear, which is more on the macroeconomic or... and if not, I'll continue. Okay.
My question is: are all of these changes really just trying to address symptoms and not the actual root cause, which is the fact that all of these member states have their own individual monetary policy, right? Even though they have a shared currency, and is it really getting at the real root of the problem, which is until you can control individual countries' monetary policy, it just kind of kicks the can down the road, so to speak.
Well, I think it's a mix. I mean, some of the measures were obviously put into place to firefight a little bit, and if you want a bit of a bandage, because you have something that has to be done. But in parallel, for instance, the banking union and some of the steps we are taking are much more looking towards the future and creating more of an integrated European Monetary Union. So I think we're not there yet, but people are very aware that we need to do more, and some of the reforms underway, some of the proposals on the table go in the sense of addressing some of the problems we had in a system where you do have a currency, but not necessarily the monetary policy that should go with it. So we are working on that. I mean, there were a lot of pressing things that had to be done first, but there's also now a lot of things underway and thinking about how we move forward. So I think we will eventually get there.
How does the firewall work? What exactly are the steps that have been taken to create this safeguard between countries?
So in practice, we have a fund that has been created, and countries can really have, when they see that they're getting difficulties to have access to finance, that the conditions that they have are getting unsustainable, they can request access to that permanent fund, if you want. So the idea is to have a permanent fund that is very readily accessible and right away can step in to provide financing through different instruments on the market. And that's a quick way to resolve some issues that may arise for one country.
I'm curious what the discussions are in your branch of the EU about austerity, and whether, particularly in the last month, as some of the core research on austerity seems to have been debunked, let alone the fact that it doesn't seem to be working necessarily in Spain and Greece and elsewhere, whether the EU itself is starting to change its focus on austerity, or at least its endorsement of it.
Yeah, I think maybe to avoid any misperceptions, we never only focused on austerity. So there was always a growth and job angle, but it's true that the pressing needs meant that some of the reforms were maybe more austerity focused, debt reduction focused. So, but where we are right now, President Barroso made some recent statements where his major point was to say we still believe that we had to do some of those reforms and some austerity was needed, but obviously none of these reforms can go through if you don't have political support. So he was also saying we're getting to a stage where now what is more important is growth and jobs. And you will find that regardless of some of the economic studies, I mean, obviously the academic reflection is part of it, but regardless of that, there is already a shift in terms of promoting more policies that are targeting growth, and also providing more time for certain governments that need a bit more time to achieve some of the targets. So in practice, you are already seeing a little bit of a rebalancing from the more drastic situation where we were before, and not trying to focus more on other measures, and giving more time to France, to Italy, and to a few countries that think they need to have less stringent targets for the immediate future. So we always had, at the Commission level, we always had a focus on the two, but I think also more clearly right now, in the way we work with member states and the conditions that are put into place, we're trying to provide a bit of breathing space to make sure that we can address also the growth and the employment challenges. So hopefully that will work.
In regards to youth unemployment, I just had a question. With the training that you were talking about, is part of that language training that would allow citizens from like Portugal or Spain or Greece to leave their country and go to, say, Germany or Sweden or Norway, where there are more jobs created that they could actually work for?
Yeah, the question of training, it's obviously a competence that is mostly at member states level. So education is still mostly a member state competence. But at European level, we do have programs to focus on where we see gaps and skill adequacy. So right now there is some thinking on mapping skills, across regions, and where we have strengths, where we have deficits. Language training, there's always some funding and support for for that. But I think right now the focus is a bit more on skill adequacy, updating skills, and in other areas. I mean, obviously the question of labor mobility is one that is very complicated in Europe, because in the US with one language it's much easier for people to move around. So we've always been promoting languages, but obviously it also takes time, and there's other reasons why people sometimes do not want to move. So there's really a lot of programs in place, but a lot of it at this stage is more about making sure we find the skills that are needed for the market of today and tomorrow.
So 2 questions. With the access to the big fund, with the firewall that you were mentioning, who decides when they get access to that they're in enough of a trouble that they actually get access to those funds? And also, is the purpose of trying to form these central banks to try and downplay the national autonomy within the EU?
Yeah, I think in terms of access, you have a country has to request some support from the ESM, and then there's different criteria to be met, and depending on where they are, what they request, and what they may accept also in terms of conditions, they can have access to it. But it's basically, they have to request it, and then people will look at where they are. But I mean, in general, a country doesn't request it unless it needs it. So it can be very quick. And I think your second question, I don't think there is a plan, if you want, to reduce autonomy and sovereignty. I mean, those issues, I mean, all the member states have to agree to whatever we do. So, you know, it's about the Commission, the European institutions, the ECB, and member states agreeing on the best way forward. And it's not always easy to find out what is the best way forward, but I mean, little by little, we're finding the right adjustments and the right way to correct maybe some of the flaws of the initial system. So I think there is always, I mean, the European Union has been always a path of closer political integration and closer economic integration, if you want. So that's continuing across different areas. On the economic and financial side, I think we're you know, finding a way to all agree on the rules of the game and the best way to manage a system like the one we have in place. Very good. If you want, I think I'll continue to the other part, which is more on the trade side, and that's actually more my area of focus, the one I've been working on for the past few years, and where we think we have quite a new exciting project on the way, which Corey mentioned before. So I start a little bit with, let me go back to that. I always like to use this slide just to show you a little bit how important the EU is as a trading partner, regardless of the economic crisis. By the way, the trade hasn't been affected that much. So people don't always realize that Europe is the largest trading partner, and that actually pretty much a very sizable part of the world has the EU as its first trading partner. People tend to overlook that. And that's a slide that I use to show the importance of the EU and the US taken together, if you want. If you look at the first column, it's the share of the world GDP. So what I find interesting in that one is that a few years ago, we would, my predecessors and academics, we'd always use the fact that EU and the US together represent 50%, half of the world GDP. It's actually, the latest study actually tells us that we are really closer to 40% at this stage. So no longer half of the world GDP. So obviously the world is changing. GDP is growing in other parts of the world. And it's good to keep that in mind. What is changing less rapidly is the question of foreign direct investment. So if you look at the middle columns, taken together, really the EU and the US receive more than half of the world foreign direct investment. And actually, we're investing almost 75% of the world direct investment. So really, we invest 3 times more than the rest of the world. And a lot of it is actually combined investment. So really the cross investment between our economies is very substantial. You see it anecdotically when because you will have a lot of European companies, but who knows, for instance, that Trader Joe has actually German capital. It's German capital. There's a lot of things that you actually don't even see, and it's the same in Europe. People will see brands and they don't realize that they're just American companies because they're so integrated in the fabric of the economy. So that's one thing to really keep in mind, thinking about trade and investments between Europe. Yeah, those are really figures that I think are very interesting. Also, every day, if you take together the trade in goods, trade in services, and investment, we're talking about 1.7 billion being exchanged every day. Very, very significant. If you actually look at the way our companies invest in each other, so we're talking about 15 million workers that are on both sides working for American and US companies. When we were at these Europe days, I had a colleague from the UK who was saying that every day there's 1 million American workers who go to work only for British companies, UK companies. There's a lot of focus on Asia and the growing markets in Asia. But actually, if you think about the sales of the US affiliate companies in Europe, it's the double than the sales in really the entire Asia Pacific. So not only China, but the entire Asia Pacific. Thinking about US services sales, the EU was 57% of that. So really, sometimes we miss this picture when we think about world trade and we focus on emerging economies, the famous BRICS. There's actually a lot that is going on across the Atlantic. So I'll go briefly through that, but so we've just launched this new initiative that we call Transatlantic Trade and Investment Partnership, an awful acronym. TTIP is the name, and you may hear a bit more about that over the next few years. Basically, we went through a process where for a year, the administrations on both sides of the Atlantic were looking at what could be done to integrate our economies further. As you may know, we've had pretty large trade disputes in the past, so a lot of people were a bit skeptical about whether the EU and the US could agree on trade and investment. But the recommendation of the administration was that it was feasible. As a result, President Obama made a reference to that in his State of the Union address, and the next day we had a joint statement by leaders on both sides announcing that we would initiate procedures to launch an agreement. Which means that the way it works, so on the US side, they have to consult Congress. They have a 90-day period where they consult Congress, and that's going to come to an end in around 20th of June. On the EU side, the way we work, the Commission, so where my institution negotiates all trade agreements on behalf of all our member states. But before we can do that, we have to agree with them on the objectives. So what we're discussing right now with France, Germany, and others are really what are the objectives that we want to pursue. And we hope to have an agreement by June or so, which means that negotiations would be launched around 8th of July, probably in Washington. And the way it works, basically, you have a bunch of experts coming from Europe. They sit down in rooms for a week discussing different issues, and you go on and on until you have an agreement. I mean, sometimes you can go up to 15, 20 rounds, depending on how difficult it is to agree. And at the very end, usually only the remaining issues are very political and require involvement from the top on both sides. That's usually the way we sort the remaining issues. And what we would cover really, I mean, we are talking about market access, so that those are tariffs on industrial and agricultural goods, so reducing the tariffs. Looking at barriers to services and investment, there's not a whole lot in the EU and the US, but you still have some areas where there are restrictions. For instance, air transport is an area where foreign investors can only have 25% of capital in the US, 49% of capital in Europe. Procurement is an area where foreign companies are not always allowed to bid for the same contracts as domestic companies. So that's one area where on both sides we would want to have more reciprocal opening. The idea being that if you allow more bids, I mean, you'll also reduce prices, you'll have more choices, and that's going to be good for budgets also, whether it's federal budgets or sub-federal budgets. The regulatory issues and non-tariff barriers, that's something where we will do with the US something very different than what we do with other regions of the world. We are negotiating right now with India. We've just concluded an agreement with Singapore, Korea. We're negotiating with Malaysia, Vietnam, but with none of those countries, even Canada. We are about to wrap up a negotiation with Canada right now. But even with Canada, we're not planning something as ambitious as we're planning with the US. So what we're doing right now is really consulting all the key manufacturing sectors and asking them to come up with suggestions on how we could bring our rules on both sides of the Atlantic closer together. So how we could have health and safety requirements that would be similar. Right now they are not. I mean, if you think of car sectors, the lights are different on cars in Europe and in the US. The seat belts are different. The airbags are different. A lot of times there's historic reasons for that, because the rules were crafted in a certain way, the crash tests are thought in a certain way. And we think that because our products are similar, because GM produces in Europe as it produces here, Volkswagen is also producing here and in Europe, we think it would make sense to have as much as possible similar rules, only one test that could be done on both sides of the Atlantic. So that's something we're working on, but which is quite complicated, because it means bringing regulators on both sides of the Atlantic. It means bringing industries together so that they can agree on requirements. So it's a complicated exercise, but it's also one that could have a lot of benefits for companies if we're able to complete that. And then the last part is really about crafting trade rules that would become a model for the rest of the world. So when we talk about intellectual property, customs and trade facilitation, we are hoping to have rules that will be quite ambitious and that could end up being a model also for the future. Maybe inspire multilateral negotiations at some point, and so that's quite an interesting part also of the discussions. And I won't go through all the figures, but I mean, there's some macroeconomic studies that has been conducted by the Center for Economic Policy Research in London. I mean, they put together models, and there's different way to look at it. But for instance, the first figure, 8% and 6% for exports, are really something that you would see right away in the short term. So you reduce the tariffs and automatically you would have exports going up. If you go to, maybe 10 years after the implementation of the agreement, you would have even bigger figures, also because of the regulatory aspect, reducing red tape and the other things that we're trying to do. So, I mean, those are obviously figures that stem from an ambitious scenario, but in general, I mean, all the studies point to really economic benefits. And I mean, I've been looking a little bit at Utah trade, and I will go through that very briefly. But I actually didn't realize until I came here how important the EU was for Utah companies. And really, 6 of the 20 top export partners are EU member states. Same for imports. I mean, the direct investment in Utah is very significant. The jobs created also, I mean, I'll pass, those are the list of sectors, but what is interesting here is maybe just the fact that Utah exports to the EU really doubled in the past 5 years. And what is quite interesting also, I find, is the number of jobs that are created by European investments. So all that is quite significant, and it means that if we manage to complete this negotiation, if we manage to pass it, because it means also having the Congress agree on that, which is maybe also more difficult. I have a parliament back home to worry about too, so we have to conclude the negotiations, we have to get it passed on both sides, Congress and European Parliament. Possibly in Europe some ratification at member states level also, and then hopefully we'll be able to reap the benefits and support trade and investment. So I think I'll stop here. Those are, you know, two of the areas that have been quite prominent in for, I would say, our economic agenda with the US. If you have other questions on other policy issues, I can try to answer. I can't promise you an answer. We have tons of policies at European level. I don't know all of them, but that's what I'm working on, and I'll be working on this trade negotiation for probably the next 2 to 3 years until I go back to Brussels. And and all the best for you. I hope some of you may work for European companies in Europe, travel to Europe, and foster ties between the EU and the US. So thank you, and happy to take any question. Yeah, and I'll mention here there's 2 web links on the PowerPoint. One is the delegation website, euintheus.org, and you'll see a lot of things about visitors coming to the US and some of the important things that are happening. And the other website is really about trade and investment, and any news on the trade negotiations, you will find it there. So check our websites also.
Well, thank you for being here, and thank you for your presentation. I just have a 2-part question. It's more about kind of your opinion looking forward into the future, particularly about the Commission. There's been a lot in the media the last couple of weeks about Euro-skepticism being at an all-time high in these 5 of the largest EU countries, and President Barroso's term is coming to an end. And so what do you see what's happening within the Commission moving forward to try to either reform the Commission or changes within the Commission itself to address some of these kind of attitudes and real concern within these largest European countries about the state of the EU, about the democratic values in the EU, and what can the Commission do, and what do you see even internally within your own organization?
Yeah, I think the question of the democratic deficit in Europe is a complicated one. It stems, obviously the Commission is like an administration, if you want. We're not elected, but we do a lot of administrative work. We prepare all the rules and the legislation that's drafted by the Commission. And then there's a question of the Parliament, where the way the European Parliament is elected is also sometimes, there's different systems in different member states. Sometimes you have national lists, so people do not always have a circumscription. You can't always identify your deputy. He's not always going to be spending a lot of time in your member state. There's differences across member states which make it sometimes more difficult for Europeans to identify with one European deputy. They may even not know who is their deputy. And then there's a question of the head of the European Commission, which is normally appointed by the member states. That's the way it has worked so far. The next set of election is 2014. So 2014, our parliament is renewed in June, and then the commission gets appointed. There is one proposal right now which would address partly the deficit. So the parliament has suggested that before the elections, they would put forward 2 names. So or the different parties would put forward a name for the head of the commission. So then when you have the result of the parliamentary elections, you would know right away who is the head of the commission. So that's departing from the system before, where member states would agree on the head of the commission. So there is a bit of debate about whether that will go forward or not. And but I think people are aware that we need to do more to also communicate. Europe is complicated, and what has happened in the past, is that Brussels was generally blamed for unpopular measures, while the member states would take credit for more popular ones, even though any measure that Brussels take is actually a measure normally that is accepted by member states and voted on by the parliament. So there is a bit of a question of accountability, and the fact that sometimes for a politician it's easier to say, well, it's Brussels, rather to say, well, actually I voted for that. So the way things work, it's a bit more, sometimes accountability is a bit different. I think there is a realization that we need to work on that. I think the Commission has been trying to explain a bit more some of the things we do. So for instance, we've been, telecom is one sector, for instance, where the Commission has worked a lot to cap some of the fees to help develop broadband. So really to make sure that the internet would become more accessible for people. So that's one area where, for instance, we've been explaining a bit better what we do. But it's I mean, Europe is still young, you know, we are developing, things are moving on the way. So I think one question is the institution and how we elect maybe the president. Other questions are how national media, how national politicians portray Europe. I think it's a shared responsibility, and if Brussels is always seen negatively and then is going to backfire at some point. And then there's a question of communication and making sure citizens understand better what is happening at national level, what is being decided in Brussels, why we need to have harmonized rule on certain issues. So it's complicated, it will take time. But it's true that people are, the politicians, I think, are more aware that there are risks and that we don't want to, we want to address the growing Euro-skepticism. So things are underway, but it's a, you know, it's a long-term project.
Hi, you mentioned a push towards regulatory integration for the auto sector as part of the TTIP process. Are there any formal processes or any formal arrangements that are done in that sense? And how does the industry see that process?
So the way it works is that we've actually consulted industry. So we've asked, there was a joint consultation on both sides, asking industries to come with submissions and as much as possible come with joint submissions. So in the auto sector, you had the car association representative in Brussels and the association in Washington coming together and looking at different standards, making very concrete suggestions on what they think could be aligned, you know, what is different, why it's different, and where they see scope for closer alignment. So we have already consulted industry, and besides the car sector, we have more than 100 suggestions from different groups about what could be done. So pharma, medical device, chemicals, a lot of people came with suggestions. I think the car sector is probably the most ambitious one from what we've seen. So that was the first step. So the industry has been consulted. Now it's really, we need the regulators on both sides to sit together and try to agree what is feasible or not. So that will happen, you know, in the course of the negotiations. We will have a lot of more discussions, people sitting together, probably reconsulting the industry on some aspects. Those take time. I mean, those are complicated issues. So it could well be that at the end of the negotiations, we agree on a few sectors, on a few things that can be done for certain sectors. And for whatever has not been agreed, we could also design a process to make sure that we continue working towards aligning our rules, maybe also aligning our rules in the future a bit more. So before we start designing different rules, actually coming together and discussing a bit further. So all that is underway. I mean, it will probably be a long-term process also, but from the industry side, there's a lot of interest, especially for industries where you see a lot of cross-investment. You know, when industries invested on both sides of the Atlantic, it makes a lot of sense for them to have a more similar set of rules. So there's a lot of support.